The stock market went from breaking record highs to entering recession territory in less than 1 month, and every investor wants to know the same thing. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. We are living in a very unique time. I mean, me and my team are all working from home, but I still get to come into the office and record videos. How you doing? Parents are spraying their kids with disinfectants when they come home from school.
To be disinfectant wise, this one just spraying his son down with disinfectant spray. Now Annie Jones hoped plastic would help protect her when she went to pick up her nephew.
And Americans are finally learning the possibilities of using a bidet. You know, the toilet spray thing.
Bankstown mother and daughter have been charged after a fight over toilet paper in Woolworths.
History books are going to be talking about the lives that we're living today. And I know it's very serious, but I'm not going to get into exactly what's going on in this video. I already made a video where I talked about that, and I'll link it for you in the description below if you haven't seen it yet. Today, I want to focus in on the crazy financial environment that we're in right now, because every investor wants to know the same things. And every time you see market crashes like this, you have three types of people. You have the people that lose everything or close to everything. You have the people that watch it happen and then look back and wish they did something different. And then you have people that come out very rich. My goal is for you to stay healthy and for you to take care of your family and for you to come out of this winning financially. So make sure you watch this video until the end, because towards the end of this video, I'm going to be talking about some things that you should be considering buying. But before we get into that, I want you to use half a squirt of hand sanitizer, because you got to be careful with how much you use nowadays. Hit that thumbs up button and subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. And hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. The stock market is a place where regular people like me and you can go and buy shares or ownership of big companies like McDonald's and Amazon and Apple and Chipotle and Disney. The price that a company or a stock is selling for depends on just one thing. Well, it depends on many things, but whether it goes up or down depends on just one thing: supply and demand. When you have more buyers than sellers, the price of a stock or a company goes up. When you have more sellers than buyers, the price of the stock or the company goes down. And then there are essentially three things that change the number of buyers and sellers there are. The first is how profitable a company is. Like, for example, if McDonald's shows that they are growing in profits and they just made a ton of money and a ton of profit this last quarter or this last year, you're going to have more buyers, because naturally when a company is making more profit, more people are going to want to own that company, and so more buyers come in and the price goes up. But you have to couple this information with two, confidence in the economy, because if people are scared of a recession coming, they're not going to want to buy a company. They're not going to want to spend their money because they're scared. And so you'll see less buyers come in, and you might even see prices come down. And then you have to couple that with three, outlier events. You might own shares of a company like McDonald's, which is in the burger and real estate business, and they're rocking and rolling, and then out of the blue something unexpected happens, like Russia starts an oil war with Saudi Arabia and the rest of the world, and now all of a sudden people get scared and they want to sell, and you have less buyers coming in. Well, these things that I just talked about can cause a lot of short-term hiccups and volatility and ups and downs. History has showed us that over the long run, strong companies will grow and go up. That's why they say the stock market is a device that transfers money from the impatient to the patient. That's why the people that get crazy emotional and they get stressed about all these daily moves and they panic sell because they want to get rich in 30 days are the ones that end up losing big. And they're the reasons that patient investors can build a lot of wealth over the long run. At the time of me publishing this video, the stock market is about 20% off of its highs, because people are worried about quarantines and businesses being shut down and people not spending money and businesses not having money and not knowing what's going to happen. Remember, the stock market is tied to businesses and the economy. If people are healthy and they have money, then they're going to go out and they're going to shop and they're going to spend money. If people are spending money, then businesses are going to make more profits and they're going to have more money to invest in their business and hire more employees and grow the economy even more. And that means that the business is going to grow, and so will the stock price. If people are unhealthy, or if people don't have money, or if businesses are shut down, it's the complete opposite, because now businesses have smaller profits. And if businesses have smaller profits, they have less money to invest in their business, they have less money to hire more employees, and they'll have to start laying off employees. And so now you're going going to see stock prices come down. In the last month, have businesses and companies endured enough pain to cause a 20% drop in net worth or market value, which is what they call it in the stock market? Maybe we have. Maybe it's overblown, or maybe it's just getting started. We don't know the extent of what's going on yet, and we don't know if this is going to last for weeks, months, or years. But again, if history is any indicator of the future, we know that over the long run, companies and the economy will recover. We just don't know if things are going to get a whole lot worse or if things are going to get a lot better really quick. As an investor, when you see market crashes like this, that means you will have the opportunity to buy strong companies at huge discounts. But let me also couple that with a little disclaimer, because I am not your financial advisor. I'm just a random guy on YouTube. So you should always do your own due diligence, because investing has risks. You are never guaranteed to make money when you invest, and you might even lose money, so always do your own research. Realistically speaking, things are probably going to get worse before they get better. I don't know this for sure, but that's just my theory. Now, what does this mean for you as an investor? Because you don't want to get caught trying to catch a falling knife, and it's impossible to time the market. No one knows when things are going to bottom out. Well, I like to do a type of drip buying, which means you buy stocks or investments gradually as they come down. As things come down more, you buy more and you invest more aggressively as things come down harder. If you are a brand new investor and you've never invested before, you might want to consider looking at index funds. You can think of index funds kind of like a group of stocks. Now, instead of you going out and trying to find the perfect company or the perfect stock to invest in and risk all of your money going to zero, because if your company goes bankrupt then you lose all your money, now you're investing in a little bit of a whole bunch of companies, because now this index will have ownership in a bunch of different companies. And so if you own this index and now this index owns 100 companies and one of the companies goes bankrupt, you don't lose everything, because now this index fund is just going to kick out that company and put in a new company, and so you have a lot less risk with an index fund. There are tons and tons and tons of index funds out there. You can invest in an index fund like VOO, which invests in the top 500 companies in the S&P 500, essentially the top 500 companies in the United States. Or you can invest in an index fund like OEF, which invests in the top 100 companies in the S&P 500. And then you have index funds for different sectors of the stock market. Like you have technology company index funds and real estate company index funds and dividend company index funds, and then you have growth stock index funds. So if you wanted to invest in tech companies but don't know what's the perfect tech company to invest in, you can invest in a technology index fund, and now you get exposure to a bunch of different technology companies. The way you buy index funds or any stock is you have to use a stockbroker. You can use our sponsor Webull, which I have linked for you in the description below. All you have to do is enter in the ticker symbol of the index fund you want and then fund your account, and then you can buy it. The cool thing about using Webull is that they charge you nothing to make a trade, so you can buy stocks and not have to pay any commissions. And you can do a ton of research right on their app. It's completely free to open an account with Webull, and they've gotten amazing recognition from Benzinga and Go Banking Rates. And the best part is they have a limited time promotion going on right now where they are giving Minority Mindset fans 2 free stocks just for opening an account and investing with them. So if you are interested in investing and you want to capitalize on this limited time offer to get your 2 free stocks, I got the links to where you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. They don't charge you any money to make a trade, and it's free to open an account. So if you want to learn more, get started and get your free stocks, I got the links for you in the description below. If you're going to be investing in individual companies, you want to make sure that the company you're investing in is strong, because we don't know how long this downturn is going to last, and so you need a company that can withstand a recession if that were to happen, and so that means you want to make sure your company isn't going to go bankrupt. So the things you want to look for are cash on hand and not a lot of debt, because if things get rough, you want a company that will have cash that can support themselves even if they're not getting a bunch of sales like they're used to. Growth companies that burn cash with no profits are very risky right now, because when the stock market's tanking and valuations are coming down, it is harder for these companies to raise more money, which makes it harder for these companies to stay in business. Again, we don't know what things are gonna look like in a week or 2 months or 6 months or a year, so you gotta factor that in. One type of company you can look at are companies that are directly benefited from preventative measures. These are companies that sell cleaning supplies and toilet paper like Procter & Gamble and Clorox. Again, I'm not telling you what to buy, because everyone's investment goals are different. Some people are gonna wanna see returns in 3 months, months, other people 3 years, other people 30 years. So depending on your goals, you're going to have different investments you want to make. So always do your own due diligence. Second are tech companies, because if people are sitting at home, they're going to be scrolling through YouTube on their phones, or they're going to be shopping on their computer. So that's companies like Amazon and Google. Third, you can look at the hardest hit industries like airlines, Delta, because no one is traveling right now. There are travel bans all over the world, and businesses are putting so many restrictions on travel, so no one's flying on planes. You can look at hotels, because if no one's traveling, then no one is staying in hotels. You can look at event planning businesses like Live Nation, because now people are having to cancel concerts and people are scared to stand shoulder to shoulder next to people. Eventually, people will fly on planes again, and they will stay in hotels again, and they will start going to concerts again. We just don't know how long that's going to be, which is why you want to find a company that has the ability to survive. This way they can thrive once again. Fourth, you can look at investing in financial companies. If you think this is all overblown and it's not going to get any worse and we're not going to have a credit crisis and this is all made up, well, then you can invest in banks. They've been hit very hard because people and investors are worried about what could happen if this doesn't get resolved quickly. I'm going to say this again. Remember, the key to succeeding is you need to find a good and strong company, and you need to have patience, because when things are crazy, markets get volatile, and that means they go wildly up and wildly down. And so you need to be investing for the long term if your goal is to make money. And if you're wondering if there's only an easy way for me to stay on top of what's happening in the finance and business world, well, there is the free Minority Mindset newsletter, because we email you a breakdown of the top finance and business news every single morning, and it takes you just 5 minutes every morning to get money smart, and it's a fun newsletter to read. If you want to subscribe to our free finance and business newsletter, you can do that by clicking the link up here or by clicking the link in the description below. Thank you for watching. If you enjoyed this video, share it with one friend. And if you want to learn more about what's happening in the world and how it affects the economy and your money, I already made a video on it, and you can watch it on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.